There is a silent partner in every war, a ghost in the machine. It isn't a soldier or a general. It wears a suit, not a uniform. It deals in bonds, not bombs. The brutal equation of modern conflict is this: wars need weapons and banks provide the money. Without the financiers, the war machine stops. This is the story of the most powerful player in global conflict. The banker. Where are you watching from right now? Tell me in the comments. To understand the real engine of war, hit like, share this, and subscribe. Let's begin. Governments don't pay for wars with cash. Tax money is too slow, too small. When a nation gears up for conflict, it needs unimaginable sums immediately. It turns to the only entities that can create that money: the banks. This relationship is the bedrock. The bank plays three roles: the lender to the state, the financier to the arms maker, and the trader betting on chaos. First, the state lender. When a government needs $10 billion for jets, it issues bonds IOs promising repayment with interest. Who buys them? Giants like Goldman Sachs and JP Morgan Chase. They underwrite them, buy them, and sell them to pension funds and your retirement account. Your savings are financing war. This creates debt that lasts generations. The Iraq War will ultimately cost over $2 trillion. Much of that is interest, paid to bondholders. But banks don't stop with governments. They fuel the arms maker. Building a warship requires billions up front. Companies like Lockheed Martin take massive loans and lines of credit from the same banks. Banks also engineer their mergers, creating monopolies. When Northrop Grumman bought missile maker Orbital ATK for $9.2 billion, it was a deal built on bank finance debt. More consolidation means less competition, higher prices for governments, and more fees for the banks. Finally, there is the conflict trader. Banks thrive on volatility. A geopolitical crisis is a profit opportunity. Trading desks swing into action, betting on oil prices, currency swings, and bond values of nations at the brink. Their research analyzes war risks not for peace, but for profit. And after the guns fall silent, vulture funds, backed by bank capital, by a shattered nation's debt for pennies, then demand full repayment during reconstruction. They profit from ruin. This isn't theory. See it live in Ukraine. On one side, Western banks lent to Ukraine using sovereign guarantees, meaning if Ukraine lost, the US or UK taxpayer covered the loan. The banks took zero risk while collecting interest. On the other side, the primary weapon wasn't just missiles. It was financial sanctions designed to cripple Russia's access to the global banking system. The battlefield was the ledger. Defense stocks skyrocketed, and banks facilitated a flood of new NATO bonds. The entire financial ecosystem activated, proving modern war is waged with currency. But this creates a fatal conflict of interest. Banking is aggression neutral. Profit has no morality. Historically, the same institutions have funded both sides of conflicts. In the complex web of global finance, money can often flow to sanctioned entities, with banks pleading ignorance. If a bank profits from lending for weapons, profits from trading the chaos those weapons create, and then profits from rebuilding what was destroyed, where is the incentive for peace? Peace becomes bad for business, and this machine is now evolving, becoming faster and more dangerous. The next front is already here. The financial machine that feeds traditional war has found a new, limitless frontier. It is no longer just financing tanks and treaties. It is now underwriting the battlefields of the abstract, the silent war in the digital ether, the algorithmic calculations of artificial intelligence, and the cold, fast theater of space. Here, the weapons are lines of code, data streams, and orbital satellites. And the capital required is even more immense: more speculative, and more tightly woven into the fabric of the global economy. This is where the marriage of high finance and high-tech warfare becomes complete. The banks are no longer just funding wars. They are funding the infrastructure of perpetual, invisible conflict. The first and most voracious new market is cybersecurity and digital warfare. Think of it this way. For a bank, a traditional weapon like a tank is a simple asset. It's built, sold, and depreciates. But cyber warfare is a subscription service. It requires constant updates, perpetual monitoring, and endless new lines of defense against an ever-evolving threat. This is a banker's dream. It creates recurrent, predictable revenue streams. Venture capital firms and investment banks are pouring billions into cybersecurity startups. But not just any startups, those specializing in offensive capabilities, intrusion software, surveillance technology, disinformation platforms. Firms like Palantir, with its origins in CIA funding, didn't just emerge from a garage. They were capital-fueled rockets, buoyed by massive injections of private equity seeking the ultimate high-margin government contract. When a nation-state invests in a hacking tool, the money trail often leads back to a fund in Silicon Valley or a private equity group in London, who saw a 10x return on exploiting digital vulnerability. The banks facilitate the mergers that consolidate this power, creating digital arms giants whose products can destabilize a country without a single soldier crossing its border. The threat is infinite, so the budget and the loans and bonds that underpin it's infinite too. But code is just the beginning. The next quantum leap is artificial intelligence and autonomous systems. This is the most capital-intensive arms race in human history. Why? Because AI isn't a weapon. It's a new industrial base. Building it requires colossal data centers, unimaginably complex chips, and the world's most expensive talent. The money flowing into defense AI isn't just coming from the Pentagon's budget. It's coming from the balance sheets of tech giants and the speculative bets of Wall Street. Goldman Sachs doesn't just lend to Raytheon anymore. It invests in the private AI labs that Raytheon will eventually acquire. The financial instrument here is venture debt, special purpose acquisition companies, SPCs, and massive IPO underwritings for companies whose main pitch is AI for national security. This creates a terrifying feedback loop. Private capital seeks huge returns, so it bets on aggressive dual-use AI technology. This technology spurs a geopolitical reaction, prompting governments to throw public money at their own versions. The banks then underwrite the bonds for that public spending. They profit on the private speculation and the public response. It's a perfect, self-licking ice cream cone of finance, where the endpoint is the automation of kill decisions and the privatization of warfighting logic. Then, dairy's the final and most symbolic frontier, the militarization of space. This is where the financial machine reveals its true, audacious ambition. We are not just talking about rockets. We are talking about the creation of an entirely new capital asset class, orbital real estate. Launching constellations of spy satellites, space-based weapons, and fortified communication networks require sums of money that make aircraft carriers look cheap. Who has that capital? The same giants, BlackRock, Vanguard, sovereign wealth funds. They are the major investors in companies like SpaceX, which, while revolutionary, is also a critical Pentagon contractor. Banks like Morgan Stanley orchestrate the funding rounds that value these companies in the tens of billions. Why? Because they are betting on the securitization of space. The dividends won't come from commerce alone, but from guaranteed government leases, from contracts to protect trillion-dollar orbital infrastructure. By financing the private space race, banks are actively constructing the battlefield of the next century and ensuring they hold the mortgage on it. The message is clear. The ultimate high ground will be owned and financed by the same entities that own and finance everything else. This brings us to the chilling, central contradiction of this entire system. The global financial architecture, the same one that funds vaccines, green energy, and schools, is structurally dependent on the continuity of conflict. Not necessarily world war, but the constant, high-stakes tension that justifies endless technological investment and sovereign debt. The system's stability relies on managed, profitable risk. A world of perfect peace would collapse the risk models, vaporize trillions in defensive asset valuations, and leave the machine without a purpose. Therefore, the machine has a vested institutional interest in the maintenance of threat. It is not a conspiracy. It is a systemic bias. Bank analysts write reports on geopolitical tail risks that move markets. Defense stocks are recession-proof pillars of many investment portfolios. The language of finance and the language of strategy have merged. We speak of deterrence credibility as a bond rating, and capability gaps as market opportunities. So, we must confront the ultimate question that has been lurking in every transaction, every bond issuance, every venture capital bet, have we? In our quest for security, financially engineered a world where war is not a failure of diplomacy, but a feature of the global economy. The soldier on the front line is the final tragic consumer in a supply chain that begins in a boardroom where the primary concerns are quarterly returns, risk exposure, and shareholder value. The bullet has a manufacturer, but first it had a lender. The battle has a general, but first it had an underwriter. This is the reality. The decision to go to war is now as much a financial calculation as a political one. The money is always there, waiting. So what do you think? Is this system of bank-financed conflict a necessary engine for modern state security, a way to mobilize vast resources in a dangerous world? Or is it the most dangerous conflict of interest in human history, where the institutions that fund our societies are incentivized to never let them truly be at peace? The answer is in the markets, in the budgets, and in what we choose to finance. Let me know your verdict in the comments below. If this perspective changed how you see the news, hit like, share this to pull back the curtain, and subscribe.